India's core offerings include spices, both blended and pure, and convenience foods, which cover the ready-to-cook and ready-to-eat categories. Orkla India's greatest strength lies in its ability to build and scale strong local brands while preserving their authentic heritage. The company's deep understanding of regional tastes, coupled with an extensive distribution network, has helped it connect meaningfully with consumers. Supported by robust operational capabilities, category leadership, and continuous product innovation, Orkla India is well positioned to capitalize on the rapid growth of India's packaged food industry, driven by rising urbanization and evolving consumer lifestyles. Beyond its deep roots in domestic markets, Orkla India has also established a significant presence in international markets, catering to Indian diaspora across the globe. Orkla India is a subsidiary of Orkla ASA, a Norway-listed industrial and long-term investment company with a history of over 370 years, focused on branded consumer goods and food businesses worldwide. Today's IPO marks a major milestone, not only for Orkla India but also for the Indian capital markets. It demonstrates the growing confidence that global multinationals have in India's consumer growth story and highlights the continued deepening of our domestic capital market ecosystem. In fact, this is the first IPO by an MNC FMCG company in over 2 decades. Now let me briefly take you through the details of the issue. The IPO comprises of a pure offer for sale of up to 2.28 crore shares, aggregating to approximately INR 1,667 crore at the upper end of the price band. The price band has been fixed at INR 695 to INR 730 per equity share of face value INR 1 each. The issue opened for subscription on Wednesday, 29th October 25 and closes on Friday, 31st October 2025, with the anchor investor bidding done on Tuesday, 28th October 2025. The IPO is witnessing very strong interest across consumer classes.
The total spice market, only 40% of the market is organized or branded. 60% of the market is still unorganized. And the second fact is the fact that both these brands have over 200 products in their portfolio. So if you are just using one of them, then you have got another 199 more to sell you. Another interesting part about our business has been the fact that migration of Indians has provided us an opportunity to build an international presence across 45 countries. In fact, we are the largest branded spice exporter out of India for the last 24 years. And this is not something that we are claiming, but this is something that we have got an award from the Ministry of Industries and Commerce under the aegis of under the Department of Spice Board, which recognizes this feat each year. Now let me come down to something very basic and a very fundamental perspective, which is why do we believe in building regionally dominant brands? We all know that food is local and therefore the business of food is local. As you're well aware that diversity is the essence of India. We are not one culture, but we are a collection of cultures, languages, and cuisines. We know that each state, the cuisine changes. While the distinction in cuisine is quite apparent when you compare north to south or west to east in India, I think it is even more important to recognize that even the 5 southern states are diverse in nature. We have 4 different languages that we speak, we have 4 different cultures, and we have multiple cuisine in it. The Tamil cuisine is very different from the Kerala cuisine, and the local Kannadiga cuisine is very, very different from the Andhra and the cuisine in Telangana. And I think this distinction in cuisines and this distinctions in taste determine the fact that local food taste changes from state to state, and also the brands do. The brands that best cater to consumer needs and culture always dominate the market. We believe that these positions that these brands have are often difficult to change. What your grandmother has used is often passed down to the mother, and what the mother has been using has often gets passed down to the daughter. And therefore, generation after generation continue to buy the same brand because that kind of sets the standard, the taste standard in every household. And that taste we all often refer to as the comfort taste or comfort food as what we like to come back to. And therefore, at Orkla, the core of our business model is to be build locally focused brands. Now, India's consumption story is very well known. You know about what are the macro drivers to India. But I would like to just make four points to you. First, south of India is the driver to the Indian economy, as 30% of our GDP comes out of south of India. In fact, the south of India has also much higher per capita incomes than the rest of India. The per capita income in the south of India indexes versus the average per capita income of India from 1.21 to almost 1.9 index to the base per capita income. Now, having said that, I think since the people in South are the more affluent people in India, they also drive the consumption and the consumption of packaged foods in India.
Prices in FY 2025 declined by over 30%, which resulted in lower price realization for us too. As you can see on the slide, nearly 67% of Orkla India's revenues comes from spices. The selling price of pure spices mirrors that of the market price. So despite a volume growth of 5.5%, you can see that the value growth of spices was a negative 1.3%, and this was on account of a nearly 7% decline in our prices on account of us having to pass on the raw material cost decline to our consumers partly. Besides deflation, which impacted our value growth in financial year 2025, the FMCG sector also faced severe macroeconomic headwinds. This was mainly on account of high general food inflation that prevailed in the country. Core food categories like rice, pulses, vegetables saw extraordinary price increase, which affected household budgets and consequently also impacted consumption. With food inflation cooling off since the beginning of this year, we have started to see a strong rebound in our volume growth. Our volume growth in quarter 1 of financial year 2026 was 8.5%. The measures instituted by the government of India to spur consumption, along with our strong focus to drive penetration and drive volume growth, has helped us deliver very strong and robust volume growth in the first quarter. Convenience foods or ready to cook, ready to eat is also seeing very good momentum. In financial year 2025, convenience foods grew at nearly 8%. In quarter 1 of financial year 2026, this growth has further accelerated to 12.8%, and this is a reflection of the growing demand for convenience foods. The emergence of quick commerce is also helping us accelerate the growth of convenience foods, and we expect this category to become a very important growth lever for us in the future. Exports, as you can see, represents nearly 20% of our revenues. The export business has been growing at double digit for us in the past few years, and we expect to see a very exciting growth potential for us in the future as well. Our company has had a very solid track record of growing EBITDA margins year after year. In the financial year 2025, our EBITDA margins improved by 200 basis points to 16.6%. Nearly 100 basis points of this improvement basically came on the back of raw material price decline, and the balance 100 basis points came on the back of various operational efficiencies and mix related effects.